Hello, this is the TradeState U.S. Stocks and Futures Market Preview for Wednesday, this 8th of July, 2020. Hope you had a good trading day. There wasn't much to it. We made a little money on VMware. That's it. On Tuesday, it has been a very flat week. We'll talk about that in a couple days, in a couple of minutes. We didn't get to a 13 sell signal on the ES, at least, and this is the daily chart of the broad market futures form. Has not yet made its way back to highs for the year. Let's look at the major daily charts. We'll go from there. Crude oil down 6 cents to 40.55. Gold up down $4.10. Again, playing with the risk line on the 13 sell signal. S&P cash loses 34.4, and again, not getting the 13 sell signal. Even if we did a projection, but not there. So we didn't have an update, so we didn't get the 13 sell signal. But we are very close to it, and if we had an update today or tomorrow or Wednesday or Thursday, we could easily get a 13 sell signal. We're nowhere near a recycle, so that could happen very simply with an update in the market. Meanwhile, in terms of the NASDAQ side, we did get the 12th candle up, so one more update tomorrow would also be the 13 sell signal there. Now remember, a couple things to remember. We did get the 13 sell signal back in May, and it did not give us a top in the market. That's on the NASDAQ. Now let's look at the S&P again. We did get one also back in May, which did not lead to. But how does this usually work? Remember, this the way the signal works is this. It works 70 to 75% of the time on the first try. If it breaks the signal early, which both of these did almost immediately, and then you get another one shortly thereafter, which it's hard to argue that you didn't. This is what it is. We've already got a new signal less than 8 weeks later. Then that has like a 90% chance of working. Right? This is the same reason that the monthly chart worked. Here's the monthly chart of the S&P. And again, if you look at this here, we had the 13 sell signal back in 2016. In an overall time frame where we hadn't even had a signal for 20 years, we got another one less than 2 years later, 2.5 years later. That was the one we looked at. That's the one that caused the collapse. It broke down. And on the bounce of that, we tested the risk line. But here's the deal. How does the 13 signal play out on the S&P monthly chart? One of two things has to happen for it to work. Number one, it can either go down and hit the red line just under 2,000 on the S&P, or number two, we can get a new 9-bar count to the downside, which we have nothing towards that so far. We've got we had a price flip, so we're at one up. That's the one you see, the green one you see. So we're nowhere near that, and we ran into the risk line almost exactly. Can't make it up. So the 13 sell signal on the monthly time frame is still in place, and the reason it works 90% of the time is because we had one really recently, and it didn't work. So here's the deal again on the daily chart, 1 or 2 more days up, and then we get 13, and it's close to the last 13 that didn't work. The 13 prior pretty much worked, but the 13 here. So again, keep in mind, this does not add up well for the market. And again, the NASDAQ side pretty much the same thing. The SOX closes down 27.04, not 12 yet on the count. The biotech's up 24.01. There was a 13 here recently. It's the only 13 on the daily chart of the bio in a long time, though. Russell 2000 down 26.88. The VIX gains $1.49. The trend closes at 0.82. That's still down. And again, watch that 10-day moving average, because as we kick off some of those bigger numbers, again, if the 10-day goes down to 0.85 or lower, that's a sell signal on the broad market. NASDAQ volume, 4.3 billion shares. It's still pretty weak compared to what we've been seeing, but strong compared to the world that we live in for the last 10 years. Advanced decline ratio on the NASDAQ, negative 1430. So even though the NASDAQ was only down 80 points, way more stocks down. This is bad breath of the market. And on the New York, negative 1524. Way more stocks down, and the S&P was only down 34 points. Google loses $9.73 after sweeping the all-time highs. Apple down $1.16 after sweeping the all-time highs. Netflix down 65 cents. Amazon down 56.92. Tesla gains 18.28. Facebook up 58 cents. Swept the all-time highs. Did not get over the risk line of the 13 sell signal there. Goldman Sachs down 8 points exactly. TLT, the 20-year bond ETF, up $2.29. The Dow down 396. So none of this looks particularly good, but you know what? At the end of the day, none of it should. The economy is not in good shape, so there's no reason for the market to be heading up. And here's the 2-day. Let's look at the 2-day chart. So again, remember, last Friday was a holiday. There's a short period there, but if you just look at the very left of the chart is Thursday's close, which is actual market activity. Friday's a nothing, a half day, nothing. Gap up. Dead flat on Monday, gap down slightly, filled the gap, dead flat on Tuesday until the last 20 minutes or so, and then we started to sell off. So we're trying to fill the gap from the gap up on Monday. But so far this week has been a complete and total waste of time from that perspective. The NASDAQ side is not much different, but you can't make this up. Look at this. Gap up on Monday, went higher, pulled back a little bit, and cupped out to close out the day. Tuesday, basically a flat opening. We closed the gap in the opening 5-minute candle, went higher. We got a 13 sell signal, the high of the day. The risk line is the high of the day. Can't make that up. And then we rolled over and closed the lows of the day. So the gap remains below on both the ES and the NQs. That should be what you're focused on. Second quarter has started. In terms of economic data on Wednesday, crude oil inventory is an hour into the market, 10-year bond auction at 1, consumer credit at 3. There's not much left this week. We are about to head into earnings next week. That's probably what the market's focusing on. How is this going to go? There's a lot of news about them, all the corporations that probably didn't need the money, saved up a lot of money, but they still got and took PPP money, hundreds of millions of dollars of PPP money going to companies. Probably didn't need it, so maybe their earnings will hold steady for now. But what are they doing from an employment perspective? Are they going to continue to employ people after the PPP runs out? That is what will drive the economy. Nothing else will. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading Wednesday.